Anand Rathi joining us now on Anand Rathi Wealth's numbers this quarter. And what a fabulous quarter that we saw. Additions, multiple jump when it comes to top line numbers. Mr. Rathi, take us through what's working. Has it purely been in sync with the rise in markets overall and the interest in equities? Is it client additions? Which are the segments that are working for you?
Thank you. First of all, let me give my best wishes to all your viewers. We want to increase their wealth too. And hopefully, after listening to us, they will find the ways to increase their wealth. No, it has been a phenomenal quarter and a phenomenal year. As you have seen, revenues have gone up by more than 50%. Our AUM has gone up by almost 23, 24%. And profitability, of course, has jumped almost 2.5 times. I think, what is important and what distinguishes us from others is basically we have a very clearly defined strategy for management of wealth of people, and which is not really too much dependent on the market, because number one, it's a long term. We always tell people that you must have at least 3 to 5 years plan of investing. And number two, we are not, making it complicated by making too many products. Most wealth managers will give you product A, B, C, D to Z. Okay, we have only two products. Either we have mutual funds or the market-linked debentures. And I think the goal has been our entire philosophy is objective orientation. We must have a clearly defined goal. What do we want? And there we have clearly goal that if you want anywhere between 10 to 14% return, we'll do your asset allocation plan accordingly. We'll tell you that if you want to be very conservative, we can give you a plan which will give you on a consistent basis. And when I say consistent, doesn't mean year after year. On a, if you take 3-yearly or 5-year average, it will give you 10% or 12% or 14%. So depending on the client requirement, we plan that accordingly. And since it is only two products, it's not complicated at all. The key feature which we hold is that we try to bring down the risk. Critical thing in investing is that how much volatile is the product which you are investing in. Okay. Now, if you invest in Nifty index, the volatility is about 13, which is measured by standard deviation, is about 13. But if you stack in individual stock, it may vary from 20 to 30. Okay. And the market-linked debentures have only 7 to 8 standard deviation. So, it's a very mathematical standardized solution which you have been able to do with the competence and expertise which you have developed over the years. And therefore, our year-to-year variation in the returns is not even as high as the Nifty is. Okay. So it's the least volatile return portfolio which we do for clients.
And that's just what I was going to ask, that will there be any reaction to the kind of volatility we've seen early this year in the markets? Were you also seeing interest largely, of course, from your ultra HNIs, HNI clients at this stage? Is it also a larger pool of retail that we're starting to look at? Where is the focus, built in at this point?
Good question. I think in wealth, this company, our focus is on very clear segment of HNIs, which we define people having 5 crore to 50 crores of investable funds. Okay, that's our. So ultra HNI, we have anything above 50 crore, we call them ultra HNI, and below 50 crores, we call them either mass affluent or retail. This is how we do the segmentation. Pure retail is let's say less than 50 lakhs. 50 lakhs to 5 crores is mass affluent. Okay. 5 crores to 50 crores is HNI. And above 50 crores is ultra high net worth. Our entire focus is on this segment of HNI, 5 to 50 crores. Because we think that is where, people want excellent advice and are willing to pay for the advice. Okay. When you go to ultra HNI, they are more product oriented. They want to buy product at a certain time. Our philosophy is different. Our philosophy is you have asset allocation, run that asset allocation through. We expertise in the asset allocation also. We have good expertise which mutual fund to buy. It's easy to say buy mutual fund or buy HDFC or buy, Kotak. But which scheme to buy, that is where the lot of research is there with us. So the entire philosophy is quite different from others, which has two advantages. One, it is very consistent, sort of more consistent than any other portfolio. And second big advantage is that we don't have competition in this. Nobody is concentrating on any segment, Somebody is talking about ultra HNI, retail, or, everyone. We don't want to cater to everyone in this company. We have other products and other solutions for this.
So what are the plans for growth then, given that you're already consistently delivering such phenomenal top line numbers? You've also declared a dividend, 6 rupees. So what's coming up next for you?
Our plan is that we want to grow somewhere around 25% year on year in terms of our revenues and profitability. Okay. And how that is possible to do, which you find is not at all difficult. It could be only greater. It's a conservative estimate we give, because the portfolio which we have, that grows by 10-12% year on year, as I told you, And so balance 12 to 15%, we are also concentrating on expanding number of relationship managers. If you see last year, we increased our relationship managers from 233 to 271 in 1 year. So we are adding 30, 40, 50 RMs year after year. So when new relationship managers come, obviously they get new business. The second, the existing relationship managers have two growth areas. One, from the existing clients, they can increase their share of wallet, as they say. As we find that as the clients grow with us, we keep on getting more and more funds from them. Nobody wants to give the entire portfolio necessarily to one wealth manager. So even we start, let's say, with 20-30% of a portfolio of a client. Gradually over years, we have seen, because they are happy with us, it becomes of 30 to 50, and maybe at some point of time, the entire portfolio comes to us. The second way is the existing clients also keep on getting more clients by direct contact or through references. The one big advantage is, when we have such large number of clients, we get more than 7,000 families today, okay? And even each family gives us one reference in a year. We get 7,000 new references, and taking 15-20% conversion also, it helps us to bring in another 1,000-1,500 clients.
What are you hearing from your clients? While we have you, we must also ask you to share some insight. Are they still bullish and confident on the story, India story, on equities? What are you telling them in terms of themes and funds that are likely to grow over here?
Good question. I think, basically, our clients are optimistic because we are optimistic. And over the years, our clients have understood that what we tell is truth. Even the difficult times in pandemic, most advisors thought that they should reduce the portfolio of equity. We were the one. Our portfolio, even in the pandemic year, increased in equity portfolio of our clients rather than reducing, because we give them regular communications every month, once or twice, that this is what we feel about the market. And when they look back, that whatever advice we have given them, so we didn't allow, we told people in March 20, please don't sell at all, okay? If you are too much worried, you can sell 5-10%, but don't reduce your portfolio, okay? Because that is the time when fear comes in the minds of people. By proper communication, and because our concentration, each wealth manager handles just about 25-30 clients, okay? So they are able to do one-to-one communication with them, persuade them to, stay on board. And that's why, and secondly, as I explained to you earlier, since our portfolio composition is so uncomplicated and the risk factor is far lower. So, people move their moves because suppose if somebody has in the direct stocks, that can move very, any HDFC can move 10% up, 10% down. We don't have that thing because our entire investment strategy is in mutual funds.
All right, Mr. Rathi, we'll leave it there. Congratulations once again. We look forward to speaking with you again soon here on Business Today.
If you like the video, do like, comment, share and subscribe.